So let's move on to the next slide. So it's about the waves of digital disruption that has happened over a period of time, impacting various industries. So guys, this is the wave of digital disruption which I thought I'll share with you. Okay, it started as early as 1995, and for all of it, again I'm reiterating, technology is the enabler. Technology evolves over a period of time because everything that we use always throws a challenge as to what do we need next. And there is always a technology, and there are technological experts who are there to address those stated and implied needs of all the consumers in terms of bringing in newer technology. So those technology will keep coming, and digitally that will keep disrupting. You look at 1995 types, we had a disruption in the music. Everything became digital. All our tapes got changed into CDs and things like that, became digital. Your photography, which is a famous one. Those days we used to physically take photographs and through films and get it printed. And that completely changed through digital, right? And today all of us have smartphones, and smartphones have replaced many, many things. I'm sure all of you will agree. Today, all of us wear watches, which is just an attire. Like what we wear, shoes, pants, belts, shirts, coats, watch is also an attire. We hardly look at the watch for our time. That's replaced and added in mobile phones, right? And we don't use cameras these days, right? I don't think so anybody buy cameras unless otherwise you are an expert who go and buy a specialist or a professional who buy those DSLR cameras for some higher end stuff. But otherwise, mobiles are good enough. And I would say, when you click a picture in mobile, we look better than when you click a normal phone. Thanks to all these fancy, flashy smartphones, which makes us look better. And added to that, there are apps which even further enhances our look or makes it a little funny and otherwise also, which is today popular. And look at video rentals. Those days we used to hire rental videos, but those are replaced by your digital stuff, which can be downloaded and started watching. Right? And by the way, I'm told recently even high-end mobile phones are used for filming some short films and things like that today. So which is completely replacing today, because phones have replaced everything, in my opinion. Your phone is today your watch, your obviously for talking and messaging, your camera, and it has become a wallet as well, which obviously we will see it in the subsequent slides. Today, most money is digital. So when you say digital, that resides in your mobile phone as a wallet. And today, without mobile phone, you can't. And I used to tell my team as well, today, if I start to my office or you start your college, and I get into my car and drive a kilometer and then realize I've not carried my physical wallet, I don't mind, because I still have my phone I can pay. On the contrary, if you leave your house and a kilometer later you find you've not carried your phone, you don't have a choice but to go back and pick up your phone. Because today, if there's no phone, there's no life. Because everything is dependent on phone, and all our information, data, all our day-to-day activities are dependent on phone. Right from the morning, you keep an alarm, you get in for your fitness, there's an app, health apps in mobile phones, so on and so forth. So everything is done through apps, and which rests on your smartphones these days. Moving on, in the next decade, in the year 2000, around 2010, we got the print media became digital. Today, hardly people read physical newspapers. We still have the traditional people reading that, but then the next generation, the millennial generation, prefers online, news. People only subscribe to online news now these days. So it's all digital, and as you drive, as you travel, you can finish your reading. Televisions have become digital today, right? It's more of downloading stuff and things, watching. As I said, travel became digital. Your HR services, got those days where consultants, we still have, but the larger part happens through your Naukris of the world, where completely it can match the requirement versus the available talent. It can match, and intelligently it can produce to all the employers in terms of basis some keyword search. It can tell you who are the people who have that skill set and who are available, and as per your requirement. So things have gone digital. And in the year 2015, obviously the financial world got digital. All your wallets and other payment mechanisms started looking at. Healthcare became digital. There are a lot of online apps and others available to provide availability of specialists, your appointments with doctors, and a lot of stuff. Automotive, as I said, the travel cabs and other things, Ola, Uber. The retails, Obviously, the retail, a lot of online stuff started, moving up since 2015. We still have a sizable increase in the way we do e-commerce business that has started. Education. This is something which is unheard of because we inherit from the days of Gurukulam, and we always believe, you have to physically sit in front of a teacher and learn things like that, disciple, all those concepts. But a disruption happened. I'm sure all of you would have heard entities like Byju's. Today, it's become a unicorn with values of billions of dollars. Investors are pouring in. That has completely changed the way of life. And today, if you see, in COVID times, it's only online education and something which we have adapted and we've got used to it. And telecom, as I said in detail, in terms of smartphones, in terms of WhatsApp and many other things, which is getting disrupted. And as we move on, the next decade starting now, all our safe havens, which is supposed to be the secured investments and other things, will get disrupted. Okay, so as we get into understand what are the evolution that happened in the banking space. So I would like to draw parallel. Obviously, the entire evolution happened with the enablement of technology, and without technology, this can't happen. And so I would like to draw a parallel, and that technology largely happened through the telecom evolution. So I would like to draw a parallel between banking and the communication technology, which almost parallelly evolved, and thereby which aided each other. And without this, the other one couldn't have happened. And thanks to the technology which constantly evolved, and thereby the financial world could adapt and improve on their offerings and the disruptions that happened at various periods of time. So if you look back, I'm just starting from a stage where, we heard of landlines that were there, right? I'm trying to make it very, very simple so that everybody understands. Okay, many years back, we had landlines. Okay, today, I know many of them don't have landlines at home because everybody has a phone at home, mobile phone, and every individual, a family member has a phone and they use it. There's no need for landlines, but many years back, obviously, we know we had landlines. I still remember in my very, very young days, we never had a phone. So there used to be a resident, which is 4 or 5 houses away from my house, who had a telephone, and we used to give that as a PP number. I think some of our old people like me will understand that PP number. So we used to give that number. If at all some relative or somebody has to call, they have to call and tell that people that, so-and-so, I want to speak. And they'll say, I'll call after 10 minutes. And they'll inform us. We go there and wait in the house. When the call comes, we attend to it. And if I have to draw a parallel to that in the banking, we all had standalone branches. What I mean by standalone branches is we had bank branches. Those were having customers. And obviously, as a customer, you can go there. You can sit there. You can do your transactions and come back, right? You can't go anywhere else. For all your transactions, you have to only go to that branch. Outside of that branch, even for the same bank in the same city or outside India city, will not be able to identify you. You are a customer of that bank, that branch. Right? Beyond that, you're not identified. You can't do anything with respect to your financial dealings. And banks were different those days. Okay. If I have to make it a little on the lighter side, I still remember in my young days, I've been to a bank to take a draft in my school days. I was a little scared to even get into a bank. So I went there, I had to take a draft. I gave the requirements. I was a little scared. I gave it, he said, sit, wait. And I waited for 1.5 hours for a draft. And today, and I was a little scared. When I went and asked, is it ready? We said, wait, please wait, in a louder voice. And finally, I got my draft after 2 hours. And today, it's the other way. It's the consumers who come on demand. Of course, competition, there are a lot of avenues of payments. And so for draft, the benchmark of regulators is, you have to do it in 1 or 2 minutes. That's the turnaround times that we have to maintain. Anyway, so that was the standalone branches. So what happened? When we were doing this, there was always a need, okay, to do things better than what we have, which is quite natural. And there's always a technology which is understanding such needs and working on that. We go to the next. Ranjit, press the next. So what was the challenge that was throwing? The challenge that was throwing was when we had landlines, there was a need for mobility. Okay, I am at home, I can use phone. What if I am moving? So that was the challenge that was thrown. And similarly, on parallel, if you see at banking, there was a need for anywhere banking. Okay, why should I go to that branch alone? When I have so many other branches of the same bank, can I not go to the other bank branch? Plus the same bank, why can't they take care of the requirements? Why am I treated differently? Why am I looked differently? Right. So that challenge, obviously, the technology, looked at it and came out with something called, I deliberately put cellular phones because those days it was called cellular phones, not mobile phones. So mobile phones came in at 1995, 96 times, and that addressed the need for that. So people can still be accessible when they are on move. And if you look at on a parallel in the banking side, the technology enabled and gave us the core banking, which is nothing but all bank branches are connected. There's a central server. Hold on, Rajat. There's a central server, and this server will have all the data. Bank branches will be able to access to that server and pull in data, which means you go to any bank branch, do your transactions, and still get updated in the server on a real-time basis. So that gave a lot of convenience for people in terms of accessing their banks. So that was a change, evolution that happened in the banking field. And while we do that, as I said, always we're not okay with what we have. We always look for something better. So the challenge zone was, okay, I have mobile phones, right? I'm able to speak. What else can my mobile phone can do? Can I have an access of data through that? And similarly in the banking, okay, I'm able to go to any branch, but is there an option where I can do my transactions from home? That was a challenge zone. And again, the technology evolved and that addressed that need, which the emergence of smartphones and in the banking parlance, the emergence of internet banking. So smartphones came that had data, telecom operators worked on that, internet service providers joined hands to provide smartphones that gave us data. So thereby you could even access data through your phones. And banking, yes, internet banking was provided by banks. You don't have to visit branches. A lot of stuff can be done through sitting at home through internet. So banking upgraded. And finally, with smartphone and internet banking, both combined to get something called mobile banking, which is absolutely, I would say, a kind of disruption. Thanks to the technology today, why even go to the internet site of a bank, but I have an app which I can, use it in terms of doing my transactions. Today, as we speak, while the evolution was, a lot of customers were migrated to channel like net banking, but today, as we speak, mobile banking came and completely disrupted. And even before people could migrate to net banking, some of them directly got upgraded to mobile banking. And I would call it as a marriage of convenience, because this absolutely the technology, the evolution of the mobile technology and the evolution of financial world banking got married. And here this mobile banking which was born, which made life so easy. Today, as you travel, as you're outside, as you're walking, you can make your transactions with mobile. And this is only further evolving. And today we have made it so convenient that, as a bank, we are looking at what all we can do in mobile so that customer need not visit a branch. Okay, this is convenience. This is easy. Round the clock, you start log in and do. And almost everything. In fact, I keep telling my people, other than operating a locker, which is a physical need, you can do everything through a mobile banking. Rest all services can be done on real time or at least on a drop on the floor model. Okay. So while this has happened, again, as I said, even this throws a challenge in terms of what next. Ranjit, next. So this throws a challenge of what is the need, and there's a need for interbank money transfers from mobile. Well, yes, I'm able to access my account through mobile, but if I have to transfer money between banks, what do I do? So that was a challenge. Need for paperless, presenceless setting up of accounts and onboarding clients, and interventionless credit delivery. If you want to understand, credit delivery is nothing but if you want some credit facilities, if you want some loans, okay, why do you have to pass through so many people? My credit history is there, what I'm there. Can the bank not understand and do it? This was the challenge. Again, that resulted in something called a further, emergence of technology, and I would also attribute to a disruption. Ranjit, next. Go on. This Again, thanks to some of the initiatives by government and regulators, that made us to leverage all those things in terms of all the three what I said. We got Aadhaar, which created a complete identity for all the residents of India. There was UPI, which got created thanks to again RBI and NPCI, which is a payment handle where you can transfer money without actually disclosing your accounts. NACH, which is National Automatic Clearing House, where unlike earlier, where you have to give posted checks and EMI signups, this created a complete change due to technology, where you set up your automatic debits and credits. And finally, how do you deliver this? Again, thanks to technology of API banking. I don't know how many of you understand API, this application programming interface. So banks started providing interface for customers to access various things. Okay, rather than going to the customers asking for everything, when these data are available through a centrally regulated authority, as well go and fetch from there and make the customer's life easy. And when we did this, you would have seen in the last couple of years, there's an emergence of something called fintech. I don't know how many of you have heard about this terminology called fintech, and that's the buzzword, and that's the way the credit delivery will happen going forward, right? I'm sure a lot of people are hearing fintech is nothing but doing finance through technology. Today, unlike earlier days, anybody can start an NBFC, non-banking financial company, in terms of lending. All it needs is, have some capital, of course, and you'll be backed by financial banks and other institutions or investors. All you have to do is have your own credit model, create your own algorithm. Rest of it, give a platform for customers to put in his requirement, and you have all the data about him. Through Aadhaar, you can identify, you can, get into the central data like CIBIL, CRILIC, which gives a credit history of an individual. You can access that and get his credit history and put in your system to sanction the loan. So this is, so all financial institutions are today becoming an IT company, right? And the final product we deliver is a financial product, but otherwise it's a technology company. So this is the kind of disruption that's happening now, and going forward, it will only evolve. So what has happened today? Banks have also adapted. Today, for example, my bank, if you ask me, we have created some 36 to 40 open API architecture. Okay, let me not complicate with such words. What we have done is we have created structures. So today, banks also have to adapt and think beyond their traditional banking. And they have to understand, which I'll cover in later part, that it is not that we will only do everything. We also have to accept and should have the stomach to let go deals to somebody, but still see what is that we can contribute to them. If there's an NBFC which wants to lend money, we can always do co-lending with them or fund them indirectly. But at the same time, we can be a large service provider for them. As I said, we have created architectures where an NBFC can just plug into our bank. If a customer applies to them, it can flow into us, and we can do the entire checks through the architecture which we have created and connect to all these repositories and other things. All this can happen in few seconds, few minutes. Come back and tell the report, basis the credit algorithm that the NBFC have set up, can approve or reject the loan. And post approving, again, the bank will pick up that. And as a bank, we can do the disbursement and set up the post collection mechanism. And today you also have, entities which does the collections for organizations. So it is all about, the model is today aggregation. Like we saw disruptions in telecom and other things, all aggregation. Swiggy or Zomato is an aggregator, which is leveraging on the need versus various service provider, creating a platform to deliver. You saw Uber, Ola created a platform, technology platform to deliver. Similarly, banks are also moving into that in terms of, aggregating various service providers, right? And delivering to your own customers and their customers. So it's a combination of things. So largely, if you ask me, banking service is getting fragmented. Okay, so there are a lot of changing landscapes of banking. Okay, this is just for information. Okay, retail banking is facing disruption from the following areas. Tech companies are a threat today. When I say threat, they're also disrupting this. The financial world is getting disrupted. You have the Google Pay, Apple Pays are coming in. Well, of course, yes, when you say this, finally, the money will rest in a bank, but the traditional payment mechanism which is run by a bank is getting distributed or fragmented to the entities like Google Pay, Apple, Paytms, various wallet service providers. Telco, retailers, insurers are setting their own channel in terms of, getting their financing done, and finally it's resting in the bank. You have startups, which has created many, many such things. In fact, I can give enough and more examples, which may be of interest to you, because I feel many of you will end up doing something new. So keep your options open. Okay, it's not that everything is there. You go and do something. Please believe me, all these, most of that I'm talking are from people the last 2 years who thought through and come out with such ideas. And as an entity, as an organization, our bank and many banks look up such startups because we need fresh ideas. The consumers, the next millennium generation. Because I have to quote it here. It's very important to understand India in the next decade or so will have the maximum younger generation. Our demographic profile is going to change completely. As the saying goes, while the rest of the world is aging, India is becoming younger. The next decade and so, India will have the youngest population, which means obviously India will be a powerhouse in terms of bringing in more initiatives, technology, disruptions to the rest of the world, and thereby with large data being in India. And today all of us know data is the next oil. India will be looked at as a favored destination by various financial foreign investors in terms of putting in money. So coming back to startups, there are many interesting things I've done. See what has been looked at. Today, banks or any financial institutions will give a business loan to somebody, will give, if it's an individual salary, he will get a personal loan or use a credit card. But today, see how people have started looking at specific things. Okay, there is a startup in Bangalore whom I met up. What he does is, there's an app which gets downloaded by every individual, a salaried guy. I'm just giving a small example, okay? Please understand the way you have won. Okay, all it does is, in the app you have to put in your name, your phone number. It'll ask permission to access your SMSs, largely financial SMSs. It will filter that. So what it does is, it tracks your balance available towards the month end, the last 1 week of the month. Assuming I have a balance of 10,000 in my account. And all of us get EMI reminders. Largely the salaried class would have taken loan for your home loan or a car loan or whatever, or a credit card due. There's a reminder which comes in, so you have to pay say 20, 25, 30, 40,000, whatever. And this individual will get a salary towards the month end. So basically this startup is only addressing the need of that individual for the last 1 week of the month. So I'm just sharing something which they've specifically today, every requirement is looked at and there's a solution coming, right? There's a problem statement which is getting addressed by a startup and that becomes a little disruption. So these startups coming in and kind of, addressing that need and thereby, they're taking that pie out of the overall lending business. So they do that. And, a person takes the loan, addresses all his loan needs, and towards the month and first week when he gets his salary, he repays it. That's become a large business. So what as a bank we have done? We have partnered with some of these entities. Okay, you will not have all the capital to fund. We'll fund you or we'll jointly fund and we'll run the services for that. I mean, in terms of disbursement, taking the money, and we can monitor better if that person has an account with us. So that's a news. Let me share another thing, interesting thing which I did on the which I met somebody in Bangalore. There's somebody again have introduced an app. Okay, these are thought process for all of you. I'm telling you as you emerge out from your management studies. Okay, keep your eyes and ears open and look at where you can plug in and address a particular requirement. There's a startup which again has an app. As a consumer, I have to just download that app. You have to give your name and number, and it asks for 4 things. Of course, your name, number. It'll ask permission to access your contacts, your LinkedIn and Facebook. What he's done is that entity, again, a technology company. He's bought data of, say, some 2 lakh, 3 lakh reasonably profiled individuals in Bangalore. I mean, today data is available, right? Because our entire information at various points in time we feed and that's getting captured. So all you have to do is the algorithm, the credit parameter is kept as once your contact is accessed, and the logic is kept is, if you have 4 of the 3 lakh people in your contact, your credit is approved and you're given a 25,000 rupees limit. And this limit is not cash. This limit is for you to dine in any of the restaurants in Bangalore, use that credit limit and pay after 15 days. What does it make? And today, everywhere, and more so in Bangalore, I know people dine out very frequently with friends, with family, with colleagues. And towards the month end, they don't have to worry about money. They happily spend, come back and pay it later. So what does it happen? For me, I get a credit. For the restaurants, there's an increase in business, and restaurants have smartly captured that data over spending, and they further throw some offers to them. And when you say offers to them, obviously they give, they've value added by saying, okay, this is the offer for me in the restaurants for them to attract customers. You can go and block, tables. You can block banquet halls for them if you're doing a little large party or meeting. And the benefit is increase in business. And for the aggregator who's done all this thing, he's getting a cut from the restaurant. So it's win-win for everybody. So what does it happen? Today, a consumer who otherwise uses his credit card or spends his money or takes a loan from the bank is getting disrupted with these small service providers who's giving credit facility. And a lot of investors are putting money into this. And this creates a large database of customers which can be leveraged for many things. In fact, on the lighter side, I was telling that promoter who said that, I said, more than the restaurant, you guys do it for pubs and bars in Bangalore, you will have a better response. And the value add could be, if somebody bill crosses 3,000, I said, why didn't you give them a Ola, Uber, drop safe at their house? Okay, so these are innovative things happening. I'm just sharing examples of the distributed business that's happening in the financial world. Okay, on the other side, which are the technology which is creating all these disruptions? For whatever I said, obviously mobility, the smartphones have created, the analytics and big data. And today, analytics and big data plays a very, very important role. As I said in the earlier example, it's your the data available about profile of customers, and thereby the logic is in terms of matching with them. The big data, the analytics and the intelligence we built in that is creating an amazing options for consumers and creating disruption in the world, right? If I have to quote a small example, in fact, how data is more relevant these days. Okay, in my earlier organization in HDFC Bank, I used to run campaigns, right? Obviously, we used to jointly work with our customers, retailers, merchants in terms of how do we increase their business and thereby increase my throughputs of transactions. Okay, I'll quote an example where, we were running a campaign for one of the optical store. An optical store, obviously, sells all these frames, glasses, lenses, and all other accessories, coolers and things like that. So what happened? So this optical shop said, okay, I want to increase my business. So since I was leading the campaign, I partnered with them and said, okay, let's run a campaign. What we'll do is, okay, we'll throw an offer for this month. Somebody buys over 4,000, 5,000 rupees, you get a discount. And largely, he will take the discount on him, and some portion I will take, because for me, that will increase my flow of transactions, increase my usage of credit cards and debit cards. So there are a lot of associated benefits to that. So what is the starting point? What we did is, obviously, with whatever limited information data available, we pulled up some 10,000 customers. Obviously, our input was customers who use frequently credit cards, debit cards. We pulled out 10,000 customers and sent a massive SMS campaign saying that so-and-so optical shop is giving you X% discount or a offer of, say, X amount of discount if you go and buy within this period. What happened? 10,000 messages we sent. Okay, those days we don't have any relevant information or analytics or anything. 5,000 ignored or deleted that SMS because 5,000 of them doesn't wear any glass. So that's gone. The rest 5,000, maybe around 2,000 would have recently bought, so there's no current need. So we didn't know. Then the rest 3,000, 1,000, 2,000 will have their own favorite shops, which they always buy because it's traditionally, they say, from my grandfather period I've been buying, he knows me, I know him, whatever. And the rest available targeted number was around 1,000. In that, obviously, some 50, 100 went and bought, and that was a success when you run a campaign for 10,000 customers, consumers. Today, what we do is completely different. Thanks to technology, thanks to the intelligence we have built in. If the same if I have to run a campaign, you know what we do? I go into my own customer base and pull out data in terms of customers who've used credit card, debit card in optical shops for the last 6 months, or I can even filter 6 months, 1 year, because they want to repeatedly buy. I'll go back 1 year before and pull out that data, right? And I can build enough intelligence or repeat customers. I'll go to the, same credit card, debit card account details and pull out consumers who have gone on e-commerce and bought and ordered optical requirements. So it becomes a more focused data, and thereby my response or my conversion rate is much better. So this is what data and analysis can do. And today, as I said in Ola, Uber, where I get a targeted message basis my usage, today we are able to send targeted message to customers. There's no more a segment where we send message or address that. Today, every individual is a segment. Please, as students, as tomorrow you're going to address in whatever product, it may not be banking, it could be any product, please understand the consumer behaviors have changed. It is not a segment, it is n equal to 1. I am a customer, I am a segment. My needs are different from the other person. So unless you address my need, I won't care. And thanks to technology, thanks to the data analytics, which feeds us on all these things. And as I said, open APIs. Today, as I was explaining, the APIs has given platform for us to deliver all these things. I mean, not us, to the emerging companies which thinks through addressing certain problems. So that is creating disruption. And obviously, Internet of Things today, many things, all your chat bots and other things are coming. Today, we have also, as a bank, launched banking through WhatsApp. You're chatting with somebody, you want to transfer money, go to the WhatsApp, and there are certain things which you have to do in WhatsApp, which can, initiate your transactions, get to know your balance and things like that. So customer requirements have changed. I can't ask them to come to my banking site or my app. I should be available in wherever they are. Okay, that's the change which is happening in the financial world. If they are in Facebook Messenger, I should be available there. Suddenly, as they are chatting, okay, if somebody says, okay, transfer money, I should be available there to do. Otherwise, consumers will move to the service provider who is giving that. Right? And that's the emergence of a lot of these small payment service providers, which are really doing a great job.